I'm going to start with a little news that you can find on the CDC website. Now, as of today, April 2nd, the CDC published total U.S. COVID-19 cases at 216,721. Arizona total cases at 1,598 with 32 deaths here in our state. Utah has 1,012 cases with 7 deaths here. And Oklahoma has 879 cases with 34 deaths. Now, unfortunately, we can't depend on accurate information and data from China for comparisons who have went through this crisis. But that's exactly why some of our portfolios are US-centric, but I digress. For the second quarter of 2020, the GDP is expected to contract at a 25 to a 35% annual rate, which will be the weakest number on record. Now, real GDP will likely decline by 8 to 10%, making the year the worst contraction since the Great Depression. Assuming that happens, the effects of the coronavirus will literally ripple through the US and global economy for years to come, and it'll reshape many aspects of our lives, how we work, how we play, and how we live. Now, I doubt, even come June, we're going to want to sit shoulder to shoulder with a stranger. And God forbid if anybody coughs or sneezes, that'll be completely taboo. Now, it stands now that many, including us, are calling for return to positive growth in quarter 3. So I'm going to give you some good news here. Monetary and fiscal stimulus packages are now in place, and we're going to begin to see cash flowing to individuals and businesses within the next few weeks. Now, this was one of the reasons for the recent uptick in the stock market, and it should help stabilize the economy and the financial markets. Now, one thing I can say is this stimulus package is structured completely different than what it was in 2008, which I'm very glad for, and I'm very hopeful to see a quicker and very strong recovery. Now, once we've reached the peak of the curve in terms of new cases and deaths, consumer confidence will naturally, gradually rebound, and people will start to return to work and their regular daily activities. Now, expectations are that this is going to occur in mid to late May, or possibly even sooner in some other parts of the country. Now, despite the stimulus, we still expect market volatility to remain elevated for the foreseeable future. And that's because the focus is going to be on the virus itself, not the stimulus any longer. I believe now we're about halfway through this, and now would probably not be a good time to go more conservative or into cash. The market is down about 30% from the highs. If anything, this is a good time to find opportunities if you're a long-term investor. Now, if you have cash or money sitting in the bank, these are times to invest, not wait till after it recovers. So hang in there. We're going to get through this. We're still working, now albeit virtually. We're still here for you, and we want to help. Take care. Hi, I'm Jeff Jr. with Trajan Wealth. It's not safe to assume all financial advisors are the same. Consider the difference a Trajan Wealth fiduciary advisor can make.